Hang on. First prize, Art of Game Design, goes to anybody that can tell me what Jessica's last name is. Oh!
Mitrovic!
Well, it's up there.
No, I'm saying anybody can say it right. Mitrovic.
She got it.
I'm not going to say it. I have no idea.
No. Oh, God. Oh, we got it.
All right. Art of Game Design for random Russian speaking.
What was it?
We Americanized it in my codage.
No, we missed that.
It's like, it's not a big deal. Alright, so does accounting matter to you? Yes. So, the reasons that accounting matters are, pretty basic, and some are a little more hidden. Good bookkeeping records are good to help with future money needs. Investors want to look at your records. Banks want to look at your records. Banks usually require financial statements. Investors usually require projections or financial statements. IRS, obviously. Also, a little more varied reason. The more detailed records you keep, the more helpful it will be once your company is up and running to qualify for the R&D and the other gaming credits, which is what they're talking about upstairs. Those are good ways to get money back for your company, to help with payroll expenses, to help offset your income. That's about the most I'm going to talk about tax. So, and just keeping up with accounting, make sure that you're keeping up with your business. Make sure that your business is running, that you're not going to run out of money, that you're going to keep getting sales, money. It's just good to do. So getting started, there's projections and forecasts, which are something that a lot of investors like to look at. That's used for tax planning also. Basically what you're doing is estimating what your revenues will be and what your expenses will be based on past performance. It's a good thing for internal forecasting, so you can figure out if you want to expand, if you're going to be able to expand. If you need more money, you know this, so you can go talk to your bank for a loan or go find new investors. So keep in mind, you're not going to have overwhelming success. Don't be, very high in the sky with projections. Be very conservative. Just go with what you know is going to happen. Don't just assume you're going to sell 100 million games.
Unless you Minecraft.
Yeah. Just remember to research what you're projecting. Like, are you going to actually need, or are you actually going to sell a game that's not going to be ready for another year or two? Just make sure you know what your company's going to do the next year.
$1 trillion.
Another tool accountants like to use are budgets. This is basically mainly used for expenses and how to allocate funds for different projects and departments. Maybe your advertising group needs like a certain amount of money and your programming group does, and you don't have enough to go to both, so you can figure out where you can put funds for what.
Yeah, but why do you have a parent-teacher organization?
Oh, that's paid time off. So you want to include things in your budget like employee benefits, like paid time off, health insurance parties, that sort of thing. It's also good to get all your department heads in to discuss your budget, so that way you know what needs are required, what things can kind of be pushed off until the next year, that sort of thing. Now the actual accounting part. Bank statements and bank reconciliations. How many people actually do their bank reconciliation monthly for their personal checking? Yeah, it's not many. Never is. It's a vital aspect of your business. Yeah.
Really?
I know.
Why?
Bank reconciliations help you make sure that what money you cut checks for and what money you had deposited that weren't put into the bank yet are recorded. So you know exactly what amount of money is.
Do it weekly.
You can do it weekly. Most people do it monthly to correspond with the bank statement. I have a copy of the bank reconciliation above. The circled number is the number on your general ledger, and the rectangle is what's on your bank statement. Those numbers don't match. They're never, or hardly ever going to match. That's because you'll have things like outstanding checks, checks you've written that haven't been mailed yet, checks you've written that haven't been deposited yet by whoever you wrote it, checks that are lost in the mail. And then there's deposits that you've received that just missed the cutoff, that just didn't go into your bank yet. There are these things that you have to account for, and these are things that you have to remember when you're like, oh, I have money in the bank because my bank statement says so. Not necessarily the case because you might have had a check that took all that money away if you have the bank statement.
I've seen people get in a lot of trouble by doing that.
This is a good way to avoid
With their home expenses.
Right. This is a good way to avoid overdraft. If you don't have overdraft protection, it's a good way to just make sure you have money to continue. It forces you to review your statements, and sometimes you'll notice that, hey, maybe there was a deposit in my general ledger that never got deposited. What happened to it? So maybe something's missing. Or there's a check that never got cashed. Maybe it got lost, maybe you never got it. There's a lot of reasons, and it just helps you kind of see what's missing, what hasn't gone through. Accounts receivable. This is a kind of an alien concept that anybody feels into accounting. It's basically the things that you've sold that people pay for on credit. Not credit cards, but just, they're like, oh, okay, I'll buy this product from you. I'll pay you.
It's what owed to you.
Yeah, it's what's owed to you. It's receivable. The customer accounts that are receivable. This is something you want to review regularly. Most people do it monthly just to make sure that, you know, okay, the bills that I sent out are being paid. I have an example of an aging report that we use for accounts receivable. Things that are over 90 days past due, those are maybe some things that need to be written off, or you need to call the people and be like, hey, I sent you this invoice 90 days ago, why haven't you paid it yet? A lot of times your customers need reminders. Sometimes they just want to avoid you and then you know not to sell them anything else. So it's just a good way to know what kind of customers you have. Yes?
Do you know of any good forms for people who are doing that? Use that, like, these forms?
I mean, the agent I made was in Excel. There are a lot of accounting software programs which is just built in. You report an invoice and it puts the date on and the date due, and it'll create the agent report for you. QuickBooks is probably the most popular one.
And if all your bills are more than 90 days past due, it's probably in here.
Yeah.
Nobody pays.
And then it's also a good way to, so if you do have like QuickBooks, you can look at your agent report. Like if you look at the store one, it has $1,500 every month. That might be something that you just regularly invoice, but they don't ever pay you anymore, so it's just a recurring transaction that you don't need. So it's just a good way to sort of make sure that you're recording everything that actually needs to be recorded, and you're not recording things that don't exist anymore. There's also accounts payable, which are things that you have to pay to your vendors. It's also, you can also create an aging report to show the invoices that you owe. Obviously, you want to pay your bills on time because you don't want, you know, the lights to shut off or the water to shut off or people to stop working. So the AP aging report is just a way to sort of see what's due soon, what's past due, and what bills need to be paid. A lot of the smaller companies prioritize their bills. Maybe there's a vendor you can push off an extra month or so that you know won't come collecting after you, but like the electric bill, you know that you have to pay that monthly. So that way you just make sure that that's current at all times, and it's accounts current, you need to pay it as soon as possible. It's just a good way to keep track of what bills are owed. Now there are different ways, different systems used to keep track of your accounting. There's QuickBooks, there's QuickBooks Online, FreshBooks, Peachtree, Expensify, Microsoft Dynamics, which is also known as Great Plains. There's a lot of accounting softwares out there. They're mostly expensive. I think QuickBooks Online might be one of the cheaper ones. And I think Google Docs has a accounting software. I haven't used it personally, but I know people that have.
OpenOffice.
OpenOffice, is that what it's called?
No, that's not theirs, it's somebody else's.
Well,
They're free.
There are a million accounting systems out there, and there are some that are specific for certain types of industries. QuickBooks is kind of a catch-all. Most companies use it just because it's very user-friendly. You can kind of just build a template, or there's a template for you to just fill in. You can just, there are a lot of people who know how to use it, so if you have a question, there are a lot of people who can help with that. A lot of the other softwares aren't as popular, so it's hard to figure out how to fix something from scratch. Now, when you've recorded everything, you have financial reports to worry about, balance sheet, income statement, cash flows. Those are the three big ones that investors and banks are going to want to look at. Balance sheet just shows you the cash you have, the accounts receivable you have, any property you own, any like equipment you own, any prepaid stuff, inventory, that sort of thing. Liabilities just shows you your loans, accounts payables, equity, money contributed by your owners or taken out by your owners. Income statement shows you income earned over a certain period, less expenses. And then statement of cash flows is the one most people aren't familiar with. It just shows you where your cash is going. It shows you how your net income, depending on which type of cash flow statement you use, you can start off with your net income, seeing how much you've made, how that net income is decreasing. Or how certain items are increasing or decreasing your net income. So, and there's no shame in outsourcing accounting needs if you can afford it. There are a lot of bookkeeping people out there that run from $20 to $100 an hour that can help you or answer questions or just show you how to set up software. And that's it for me. Oh, did you have a question?
So, yeah, I was just wondering, you know, a very, again, vanilla kind of setup, 2 partners, 2 employees, less than $100,000 in revenue a year. I'm trying to figure out how much to budget per month for an accounting expense. Is like $200 a month, like totally out of?
I mean, it depends where you go. I mean, I know that there are bookkeepers out there that work for $20 an hour and they can get your work done in a day. But I mean, and it also depends on how much you're entering in yourself and what accounting work you're actually needing from that. Is it bookkeeping? Is it tax work? I might budget a little more just to be on the safe side because usually when you do bring your accounting work in, an accountant will usually find things that you've not entered or not cleaned up.
So you think a little more per month?
A little bit more, yeah.
Okay.
Did you?